Hey, what's going on, everyone? My name's Andy. My channel's Finding Value. We're going to be back at it, ripping through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, or financial topics, what I cover. And we'll dive right in, take a look, and see what's going on. If you want to follow me at Financial Score Finance, and if you want to join our community, finding-value.com, that's where we go deeper into individual companies, individual sectors, and we still have a coupon code LEAP going on, LEAP. So praise the Keck Capital. CCJ Grant Isaac says greenfield projects will suffer significant cost overruns and schedule delays, including those that propose using innovative technologies that have never been deployed before, NXE and DNN. The market has yet to fully recognize the risk associated with this. I agree with that. Whenever you try to implement something completely new that has no pedigree, you're going to get a lot of problems. You better really vet those risks early on, work your way through it, and vet those problems. That's what we would do in engineering. When I used to work in engineering, I would highlight the things that I needed to do, the riskiest things on a design, vet those beforehand, try them out, get the settings, get all those things implemented first, and make sure that we have the capability and the precision to do it. And that's exactly what they're going to have to do. And it takes time. It takes time. The stud, we've got the stud with us here. Since NATGas pain trade for the bulls is in effect, we have to look at a bigger picture. Is this time different than any of the past cycles? Not really. Rally's going to start, and it's going to take many by surprise. The target is $2.60 by September. Education is important. Here's the cycle that we've got going on, and we're basically at the bottom of this cycle right now. So it's looking pretty good for NATGas being at the bottom. The risk reward is blowing out in favor for reward versus the risk. I like to take my odds down here in natural gas. Here's another one with some investment wisdom. Says, without passion, you don't have energy. Without energy, you have nothing. The earlier you find your passion, the better, because it won't seem like a chore to follow your dream, and you'll outwork everyone in the process. I would tend to agree with that. I started my whole thing in engineering. I'm not anti-engineering. I just went into engineering because I was really good at math and science. And everyone in high school, including my parents, which it's fine, they all were like, "You need to be an engineer because you're really good at math. You're really good at science." They knew that I would rip apart mountain bikes and dirt bikes and put them back together. And they're like, "Yeah, you're totally an engineer." I don't mind doing that stuff, ripping it apart, putting it back together, working on cars. But I will say this, guys, engineers are, it's a tough life. You do a lot of work, and I don't think they get paid all that well. I know that might sound counter to what people think and what their perceptions are, but a lot of engineers don't get paid that much money. I don't think that $100,000 to $200,000 anymore is that much money. So you're going to have to think out of the box. Probably start your own company or do something on the side to supplement the income that you're going to get even at an engineering job. Right? It's getting harder and harder, and as inflation creeps up, your purchasing power doesn't go anywhere. So I would say, I mean, the way that I feel working the past 20 years, I felt like I had the most purchasing power about 20 years ago when I first started working as an engineer in my earlier career. I think things were much more affordable. But again, my expenses were basically nothing, and I could live like a monk when I was single. All right, Charlie, we've got price increases over the last decade. So this is fast food price inflation. Menu prices have outpaced national inflation rates at every fast food restaurant since 2014. I don't eat that much fast food. I haven't really eaten anything from McDonald's for at least 5, 6, 7, 8, 9, 10 years. I don't even know. Same with Taco Bell. I think I might have had one thing from Taco Bell in 2011, if I can remember. And I didn't like the way it tasted, so I stopped eating there in its entirety. I know Jimmy John's, I've eaten there very rarely, but last time I ate there, which was about a year ago, maybe 6 months to a year ago, probably about a year ago, I was surprised at how expensive their sandwiches are. Holy crap, it was expensive. And there's Chipotle. Chipotle rocketed up too. I noticed that. That's probably my fast food spot that I eat the most frequent at, but I don't eat there anymore. It costs too much. All these cost too much. So fast food for me is basically out the door. I do still visit every once in a while In and Out. We have an In and Out that's pretty local here, and it really isn't that bad. It's about $10 for two burgers, two double doubles. That's what I get. Investment wisdom. It says a market downturn doesn't bother us. For us and our long-term investors, it is an opportunity to increase our ownership of great companies with great management at good prices. That basically sums up everything, though. That's when you want to buy is that market downturns. You don't want to buy when it's up. I think that's probably the hardest for most people to do. Most everyone just wants to go run with the herd and have herd mentality, and they don't want their buddy to get rich, so they got to buy it too. But if you buy when things are down, that's really the ultimate logic move versus the emotional move. Coming on down, Goring and Rosenzweig, it says, is gas the new uranium? We think the North American natural gas market is similar to the 2018 uranium market, about to enter a structural deficit. With careful research, investors could be rewarded. I hope that's the case because I own a couple of natural gas companies and I am entering that sector with that mentality mindset. With the LNG terminals coming online, basically this whole 2020s, there's just a gaggle of it coming, huge takeaway capacity. And my question is, can we actually produce that much natural gas to support that much natural gas takeaway? I don't know. But I'm going to bet that it's going to be tight. That's what I'm going to bet. And either way, even if they make some good money there, the more they produce, the more money they'll make. So as long as uh, as long as the natural gas price is high enough for them to make money, I'm good. I am really good. Here's the DXY follow through now above 105. We'll see if it sticks. That sure looks like it's going to stick, guys. Broken downtrend line, breakout retest. It's ripping. Dollar actually looks really strong. Last time the dollar was strong, like back here when this went up, oil did really well. So this is probably what an oil chart's about to do. It's probably going to break to the upside. Scotia says we expect that by 2028, 2030, non-OPEC production growth should be peaking or will have already peaked. We remain bullish. So that's for oil. Non-OPEC production growth will peak or has already peaked in the 2028 to 2030 region. That is what I am basically betting on as well. I'm betting on that we're going to peak. Probably shale oil is going to peak anytime now. 24 to 26. That would be my guess. And I think they're taking a conservative approach. Cuppy says, in a functioning economic system, Brent oil is the central banker. Twos, which is the 2-year yields, follow oil around on the screen, and then the central bank reluctantly follows the 2-year yields around. But what happens if the president dumps a few 100 million barrels from the SPR and destroys the signal? Yeah, that's exactly what they did. They're trying to manipulate the signal. They're trying to dampen the inflation rate for everyone. And there's the inflation numbers for consumer price index, which are also doctor numbers. Kind of interesting how this all works, isn't it? They tried to manipulate it by dumping a whole bunch of 100 million barrels from the SPR, and then they manipulate the consumer price index number too. Hedonic adjustments, substitutions, all sorts of stuff. Mike says a 4% rise in that's the manufacturing PMI suggests 9% year over year growth in first quarter earnings per share, or a 5% beat. So ISM manufacturing is turning and it's starting to work its way on up. There's earnings per share year over year quarterly. So it looks pretty solid so far. Lynn Alden, how markets trade for the past 40 years and fiscal dominance, nothing stops this train. That's what I'm talking about, people not changing their paradigm versus the past 40 years. All this spending may change the way a slowdown looks in the system because of fiscal dominance. All this money coming in fiscally is nominally changing things. We might not get a pullback nominally. If we get a slowdown in the market, it might just keep going up. And I think Lynn is right there. Oil price, we expect a great run over the next few years. As mentioned, regional imbalances of oil should continue to increase the need for tankers as growth in oil production coming from the West and the oil demand from non-OECD countries. So this article talks about the tankers being quite resilient coming forward. It's going to be a good area to be exposed to. Ian says the euro is breaking down from a 4-month head and shoulders pattern within a broader topping formation. So basically, we've got potential breakage to the downside. This is all-star charts with JC Parrots. And again, the dollar is breaking out against all these other currencies. That's why I'm posting this. The dollar is still king in the short term here. So here is gold, silver, HQ, silver's future. So this is Bix Weir, a quote. We're going to break 30. We're going to break 50. And then we'll break $500 an ounce. Are we really going to break 500? It says certainly possible, but what do you guys think? You think we're going to break $500 silver the way that he's talking about this? I know we've got the 40, 50-year pattern, the cup and handle that's breaking. I get a projection in the $200 or $300 range. 500, it's possible. Who am I to say that it's not possible? But let me know what your guys' opinion are. Put it in the comment section below if we're going to break $500 silver. The Federal Reserve next move might be to raise interest rates, warns former Treasury Secretary Larry Summers. So serious possibility that Fed's next rate move is a hike, warns Larry Summers. That very well could be the case, guys. Freight futures, at least in the AM update, we had dry bulk was up 4% on Capesize, Panamax was flat. Tankers were up 2%, Suezmax is flat. So we've got Brandon here. Brandon's talking about copper here. He says, I was promised a total and complete collapse of Chinese copper demand in 2024. So Chinese apparent copper demand year to date is off the page. What's going on here, guys? Yeah, it's going up, and I think people are probably offsides with some of the assumptions that they've made. That's what I'll say there. The copper's pretty strong. Gold Ventures, silver, wouldn't be surprised to see a higher level consolidation in the 26-28 zone. It says, am I going to try to outsmart this trading around it? Definitely no. From a losing position in a raging bull market, it is very difficult to get back on board. Totally agree. Do not get off the silver train if you've gotten on it. Here is another thing from Kevin. It says, agreed. Not willing to screw around and find out, because likely you're going to get left out. Exactly true. And that's how I've handled the entire bull market in all of these different areas. I'm going to get on the train, stay on the train. If the train slows down and stops, I'm cool as long as the fundamentals are good. We could see this break right on out. I think we even closed higher today in the 28s. And silver is going to be a raging bull here. And remember, if they were doing any sort of manipulation, nippy-nippy, China is going to work work them to death and just rip it through all these levels here. So I very much like silver, very, very, very much. So get on the bull. So here's Breakwave. It says data in the global coal plant tracker shows a 69.5 gigawatt of coal power capacity was commissioned, while only 21.1 gigawatts was retired in 2023, resulting in a net annual increase of about 48.4 gigawatts for the year and a global total capacity of 2,130 gigawatts. This is highest net increase in operating coal capacity since 2016. So much for the coal phase out. And you know what? That smells like opportunity to me, guys. I think a lot of people are sleeping on the coal train, if you know what I mean. Coming on down, we've got Grady here. The expected historical asset class rotation turn is now happening. Said this chart had a very probable false breakout in the making, and it is just that. Plus, the false breakout was one of many clues or weight of evidence to put it fancy that gold and silver miners were about to move. We bought the latest very lows heavily at the service, and many of those are already up 50%. Most will change mindset way too late and buy close to a top as usual. Like they did last time, rinse and repeat in the completely wrong way. In order to get things right, you must ignore your bias and your emotions. Plus, one needs the right mindset, mental balance, focus, time management, tools, and experience. So here's the chart, GDX versus SPX, the 10-year chart here. Let me move this in just a little bit so you guys can see the whole chart. There it is. We've got a PM bear low in 2016 breakout, PM baby bull high, gold big move start again, boom, boom, boom. And then we had a false breakout below this support line, which engages the slingshot cheetah. Slingshot cheetah is what I call, it's like pulling back on a slingshot, where it slingshots you higher to the upside. And maybe we can break this consolidation low point and get moving to the upside. And this is, remember, it's a ratio chart, GDX versus the SPX, large gold miners versus the US stock market. Looking good, feeling good. Coming on back. This is how gold and BTC hedge liquidity, not the consumer price index. So really what he's saying is that gold and crypto are following global liquidity. So this is global liquidity here, and then your CPI is down here. Now keep in mind the consumer price index is a doctored number. So it only makes sense that global liquidity, which is the true measurement of inflation for the most part, is what gold and crypto is following. I think that makes complete sense to me. Coming on down to Grady, we got the wheat train here. So wheat has a 45-year parabolic base and is back testing. Gold is telling us that the second inflationary wave is coming. So is this chart. And when Fed goes QE infinity, this chart goes ballistic. The commodities bull market is a lifetime opportunity and also a threat. So this chart covers the fiat paper money era since Nixon closed the gold window back in 1971, an era of inflation. So here's the wheat chart, and you can see the parabolic move that he's got here and the potential traced out move in anything that is a commodity priced in dollars. It's the dollar that is getting weaker, not necessarily the commodities going up. Here is the bearish weekly EIA data. Total commercial petroleum stock build week over week implies a WTI fair value price of $82 a barrel, or $4 overvalued, first time in a while saying that. So with that recent build, commercial inventories are slightly overvalued compared, or the price is slightly overvalued compared to commercial inventories at this time. So that's what we've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. I can share my best ideas with you guys on the website. You can see what I'm buying. I just recently made a purchase. So if you guys want to go and log on to the website, you can see what I purchased if you're interested in that. And that's all I've got for today. So we'll see you guys next time. This is Finding Value.